Good morning, everyone. This is Stephen Williams, founder and president of the CreditRepairShop.com. And in today's video, we're going to talk about charge-offs and write-offs. And I'm also going to use my Surface Pro here to write down some stuff because I feel that people are not getting it. I can look at what was going on with my other videos where I used to use the whiteboard versus the ones where I just sit there and talk. So what I'm going to do is I'm going to start using this software that's on here that allows me to write and be in the video at the same time. So it can hopefully, so you can take notes and get this, if you're finding that you have these types of problems with credit, that you're going to be able to do something about it rather than just sitting there watching videos, because I know the problem is getting worse because I could see the news reports, I could see the debt that is being sold in the market, and I can just know that a lot of people are just watching videos and they're really not doing anything about their situation. They're just trying to find a quick fix. So what I'm going to first start off with here is in this video we're going to talk about charge-offs, write-offs. I'm going to break them down exactly what they mean, how you can deal with them, the different options that are available for you to deal with them on your credit and to deal with them as a debt that you might have to owe or that you may not have to owe. We're going to go through what you should check, the things that you should know, and the things that you can check, and the things that you can do about them. First, let's start off with the debt that's being placed into the market for sale. I did not get my updated email, so this might be a repeat from last week. We had the jewelry stores. There's 3 jewelry stores. One of them $1.4 million. The other one is $630,000, smaller jewelry store, and then another national jewelry store, $2.3 million. Charge-off dates on each of these. The first one with the 1.4 million, charge-off date was 2010. That's past statute of limitations for any state in the United States. So if you get if you have an old jewelry account and I don't want to mention the company names because they can end up blocking the video here on YouTube. So if you have any jewelry store, old jewelry store account, and it got charged off, and you get the debt, a debt collector comes after you for it. First thing you need to do is you need to look at when the original charge-off date was. And the way that you can look at that is to get your credit reports. If you don't have your credit reports, I have a link below so you can get the credit reports that will have all the information. If you go to Credit Karma, one of the free ones, it's not going to show you the information that you need to know about the charge-off dates. So if you get any of these, the first thing you do is you look at the original charge-off date, and then you just simply state if it's past statute of limitations for that debt. You don't have to respond anything about the how you're going to pay, whatever. You don't have to do anything other than saying that I do not have any legal obligation to pay this debt due to the statute of limitation laws in my state. And then you put a CC that you're going to also send that to your state attorney general, that they're coming after you for a debt that is not that you're not legally obligated to pay anymore, and that if they continue, you will consider it harassment. That's all you have to do on that letter. You don't make it any complicated. Don't just don't make it hard on yourself. Don't go into your income or different things. Just state what I just told you. Now, let's talk about charge-offs and write-offs. The first thing is a lot of people get them confused because they're like, okay, is a charge-off the same as a write-off? Why is it a write-off on one account that went bad for me, and on another account it says it's a charge-off? Well, first, a charge-off, one of the things that you have to understand is that a charge-off is a legal term that that lenders have to use when they're going to take an account off their books. So legally, by the lending laws, at a certain point, which is usually 180 days of not paying on the account, some of them are shorter. It just depends on what type of account it is. But if you don't pay it for a certain amount of days, they legally have to, by the federal guidelines, they have to put it into a charge-off status. Now, what does a charge-off status mean? Charge-off status means that the debt is off of the books, as it's not an asset anymore. Now, understanding what an asset is means that, say, for instance, a bank or that wanted to be able to borrow more money or wanted to be able to show that they have a certain amount of assets, which means accounts and loans that are being paid on. They have to account for that when regulators come around. And if you have non-performing accounts, which are, accounts where people are not paying on, you can't consider those assets anymore. It would be a violation under the law for them to be able to do that. So what they've done to protect the investors that are, dishing out money for either companies to loan out to people or banks when they're getting money from the Federal Reserve to loan out to people, or using the deposits that they have from their accounts in the bank, they have to state and show that they're strong enough to be able to handle anything that goes wrong. And so any non-performing accounts must be accounted for, because that shows it'll change the strength of the bank. And, so they have to account and say that these accounts are now charged off. They're not considered assets. They're going to be put into a different collections department. Now, when it comes to write-offs, this is different. And what people need to understand about a write-off is when they actually are going to, both of them, they're able to write off to the federal government as losses, but with the write-off is when they're going to actually, you'll see this in situations where they actually forgive the debt. So say that you had a credit card debt, they figured they're just not going to be able to get any money from you, and they filed with the federal government, the IRS, a 1099-C form, which means they're going to forgive the debt. They're going to just totally write it off, forgive the debt, write off 100% of it to the to the IRS, and then the IRS is going to consider that income to you, and you're going to have to pay taxes on it. So that's when you'll see a write-off. So whenever you look at your credit reports and you see one that says write-off, see one that says charge-off, if you see write-offs, you need to immediately find out if that debt has been written off, and they're going to send you a 1099-C, because what I've seen with these companies, what they've done is that they'll do the write-off and then they'll sell it in batches to collection agencies. And they'll just pretend like, oh, we didn't know that account was stuck in there. That's what they'll say when you backtrack it, but they're not allowed to do that. Once they do that, they cannot sell it to a debt collection company. A charge-off, they can do the write-off and sell it to a debt collection company. Don't ask me how they do it. There's different accounting rules that they have, but they are able to write that off as a loss, and they're going to sell it to a debt collection agency. I guess when you think about it, when they sell it to a debt collection agency as a write-off, they're really not getting money for that debt. They're just throwing it in that pile so they can make the debt collector feel happy that they're going to be getting a whole pile of debts. When they do it as a charge-off, they're trying to get as much as they can with the group of debts, and they're telling the debt collector that these accounts are worth this amount, and we want to be able to get this amount if you buy them in bulk from us. Now, uh, let's talk about your rights when it comes to this. No matter where you are in the process, with before I forget, with a charge off, even if they charge off the account and you come to an agreement and you're making payments to the original creditor, uh, even during that period of time, let's just say that the account goes bad and you're making payments to that original creditor, it could still be considered a charge off account because they're not going to consider it an asset. They're going to close that account down. If it was a credit card account, they're going to close that account, but you'll still be making payments to them, but they're not going to consider it as the same type of asset as someone that is paying a credit card and they're charging and paying. It's not. It's going to be in their closed account division. So now let's talk about your rights that you have when you're dealing with the charge-offs and write-offs. Now, when you're dealing with an original creditor that has not sold the debt, your rights is that you can settle at a discount. And I always tell my clients to take advantage of this opportunity right here, because this is where you can usually get one. Well, I won't say that it'll be the best, but you can avoid a lot of the things that's going to happen when you have to deal with a debt collector and try to get a settlement. You can deal directly with the original creditor. You can let them know your hardship. And I was on YouTube talking to or on Facebook talking to someone, and I was like telling them that you need to take advantage of the hardship departments, because when it gets to a collection agency, they're not going to really take this into account the way that the original creditor would take this into account. You have to push to get to the hardship department with whatever company you're with. A lot of the times they will tell you that it doesn't exist. It might be the loss prevention department, but they all have this department. It's required by law. And what you could do is you could say, I want to submit my financial situation to the hardship department or the risk prevention or the risk management department for a settlement on that account. And usually 9 times out of 10 or 10 times out of 10, unless it's already in process to be given over to a collection agency, you will be able to make a deal on that. I've seen them as low as 10%. Some of them, depending on what type of account it was, could be 50% of the original balance. So that's the first one if you have it with the original creditor. Now, if they assign it to a collector, now what assignment means is that they're hired to collect it. They don't make a commission most of the time. They don't make a commission. It's just a retainer that's paid to the collection agency to they send all of their collections to that collection agency, and that collection agency is going to go out there and try to collect it. Now, same thing, what you do is you do what's called a validation. And when you do the validation, you want to find out the relationship with the collector and the original creditor, because you want to make sure that they are really approved to collect it from the original creditor. So you want to ask them that, and then during that process, what you want to do is you want to get all of the information. Well, first you want to notify them if they're with the original creditor. If they're collecting it for the original creditor, you want to notify them of your financial situation. Because what I've seen in this situation with a lot of our clients is that once you notify them that either you're disabled or you're unemployed, or you have some type of medical issues that you're going through, you can trigger debt forgiveness. And that goes back up into what we were talking about right here. Because what I've found with dealing with a lot of the customers that we help with this situation is that the original creditors don't want to keep throwing money at money that they're not going to have a possibility of getting. So if you notify them of your financial situation, and this usually works with only, this will usually only work with when they're collecting it for the original creditor, because they have no, they're not going to get paid any extra money for collecting the money from you. And the debt collector doesn't want to violate any rules. They don't want to go after money that they're not going to collect. So they'll notify the original creditor that this account is not going to be able to be collected, and they want to send it back. They want to send that collection back to the debt collector. Back to the original creditor. And the creditor usually gets that from the debt collector because they're going to put a lot of weight on what the debt collector says, because they know that they're in the business. And when they get that response back, they'll usually throw that into the debt forgiveness pile. And then that'll trigger that, what I talked about up here with the 1099, where they'll send you a 1099-C form, and they'll consider that income. Now, there's all types of things. You need to talk with a tax prep representative, someone that knows about taxes. But even though they send this, you have a whole bunch of different write-offs, and there's laws that state that you may not even have to account for that money when it comes back due to your financial situation. So don't get afraid about that. Now, if they sold it to a debt collector, so they sold the debt to a debt collector, the first thing that you want to do is you want to validate the contract of the relationship between you and the debt collector. So you validate relationship between you and the debt collector. And what I mean by that is they have to show you legal proof that they have a right to come after you, a contract with you for the debt. So what they're going to do is they're going to reach back out to first they're going to look at the files that they have, and they're going to try to just say, well, we're collecting this for this original creditor. And then you have to push, and you have to say, are you collecting it for them? Show me something that you're collecting for them. And then if you push, when you continue pushing, they're going to say that they purchased the debt. So the way that you push to get them to show that they purchased the debt is you do it in a way that they don't even really, well, I won't say that they don't understand. They know when they start getting this type of request that it's going to make them reveal their hand. So you want to make them get all of the signatures, or your signature, from the original contract with the original creditor. So when you first applied for the loan or the credit card, you want that contract. Next thing is you want all of your past statements showing all of the charges that they're claiming you made. You want all of that stuff. Next, you want to get all of your past payment history. You have a right to get that. You want all of the payments because you want to make sure that they credited all of the payments to your account. Next thing is you want the signatures, if it's a credit card, of all charges that were made. So you want them to prove that if you went and got gas, or if you went and bought some clothes at a department store and you used that card, you want the signatures, or the electronic signatures, showing that that was you, that did those charges. You have a right to do that. And once they prove that right here, this is the one that you want to watch out for too, because when they prove the relationship between you and the debt collector, they're usually going to send a stack, or it might be one sheet, but it's going to show accounts purchased. And I'm going to draw out what it looked like. When I did it years ago, they had sent me stacks of sheets, and it had like an account number. It had the last four. So like it had 4444, and then it had all of this was blacked out. And then it had my name right here. And then it had this for all the other people that they had purchased too. Had all of that on there. And if I had known back then, even though I had settled that debt, were coming after me for $4,500. I had settled that debt for $5,000. But if I had did all of this, if I had even started right here with the what I had talked about earlier with the statute of limitations, I would have never even had to pay anything on it. But because I didn't know the statute of limitations rules, and I didn't even know what I'm teaching you here. I didn't even know this stuff. Let me back that off. I don't want to do that. I didn't know this stuff here. I didn't even know about this. But what I did is I had just accidentally asked. I said, I just want them to prove all the stuff, because it was a debt that I had when I was in the Army and I was 18 years old. It was a Citibank credit card that I had. And so I didn't even really, I was like, at that age, I know I didn't have $4,500 authorization on any credit card. Probably at the most was $400 or $500. So I automatically in my own mind was like, I want to know the amount of the, I want you to show me that I charged all of that. I want you to show me that information. And when they did that, they sent me stacks of sheets. Last four, this was all blacked out, and then it had the my name. Well, actually, it did show my whole account. It had everybody else's was blacked out. All of the other people was blacked out. They were finding my account on the sheet, so I could have made that go away. Now, let's talk about let's talk about some solutions. Even I've talked about them on here, but let's talk about some quick things that you need to understand for the solutions. Is that when you're doing when you're challenging on the statute of limitations, never disclose your financial or employment status, because they have no need to know that. You just need to state, and I'll say it again, that you write a simple letter to them notifying them that it is past statute of limitations according to your state, and that you have no legal obligation to pay this debt, and that if they continue to come after you for that debt, that you'll consider it harassment, and that you're notifying your state attorneys general, and you put CC and the state attorneys general in your state, for whatever state you're in, and you put that on the bottom on the letter that you send them. They will stop coming after you. I guarantee it. So now you saw the other solutions that we had here on validating, and if it comes back that everything checks out, then you may need to go into a settlement phase. But let me show you some things that you should watch out for before you even consider going into a settlement phase. And this is something that just recently happened with a client. So now here's the clients. They were getting sued, and on their credit report, it had, so on their credit report for the credit card, it said, let's just say this is the credit card. account, it had in the columns that it was sold, and it had a debt collector's name on there. It had the debt collector's name. Now, he got sued. I don't want to put that there. On the other side, he's sued by an attorney, and on the affidavit, it had the credit card company, and the attorney that's suing. And they wanted him to answer on that. Now, there's a big problem with this when we did a comparison. Number one, it stated that they were suing for the credit card company, which was, they lied. The attorney never disclosed that he's collecting it for a collection agency. So he lied on an affidavit, on a court affidavit that they swore to. So now, if we didn't check this, or if the client didn't know to check this, or if you were in this situation and you didn't know to check that, this is a huge problem. And you can get an attorney and go into court, which is what we did for this client. But for yourself, if you don't even want to get an attorney, just using the validation information above, you have to answer the question that's in the summons. But taking this in the court, saying that it was sold, and then it says that the credit card company is suing that individual for that account, I guarantee you that the judge would throw that right out of court as soon as he saw that, or she saw that. And they would, there would probably be some type of reprimand for them filing a false court summons. Something would happen with that. But, and then the attorney, if you get an attorney, the attorney that we have that's going to be working with him automatically stated that there's going to be a settlement proposed by the debt collector, because they don't want to risk losing their license to be a debt collection in that state. That was a major violation. But what happens is that people don't know to look out for these things. Usually these are going to be default judgments, and once it makes it in that phase, there's very little that you can do unless you go into court and push. So that is something that you got to watch out for. So in this situation, if a person feels comfortable with going into court, all they would have to do is take a copy of what they saw on the credit reports where it said sold to a debt collector, have the judge compare that to what is being stated on the summons, and the whole thing will be thrown out of court, guaranteed. So now I hope that you got a lot out of this. I know that it's a lot. I know that, sometimes I got to slow down and get a lot clearer when I'm explaining things, because I know this internally, and some of the times I kind of gloss over things when I'm trying to teach it to you on these videos. But you can put your comments below if you have any questions. Reach out to us. Dealing with charge-offs is a major issue right now. There is a huge increase in charge-offs because a lot of people finding themselves in where they just can't pay their bills, and they stop paying their accounts, and they end up being in charge-off status. So if you need any help, contact us, thecreditrepairshop.com. If you need your credit reports, click the link below. There's several options. There's always an option for you. Don't never give up on yourself. Don't never give up on finding a solution. Solution already exists for you. You just got to put the puzzle together to see how that solution is going to work for you. All right. Thank you. And until next time, this is Stephen Williams, founder and president of thecreditrepairshop.com.